Good afternoon, everybody. Welcome, welcome. Oh, is my fan in the picture? There we go. Let's move that off a little bit. Hopefully everyone had a great trading morning. Things definitely livened up quite a bit. That is for sure, with all of the Iran deals this and President Trump on the microphone that, and I said this and no you didn't, and oh no I didn't say, oh man, what a mess. The news was all over the place, and we have President Trump coming on the microphone in about an hour, a little under an hour, at 1400 Eastern. That certainly hasn't stopped all of the news and everything that's been going on for today so far, causing all of this movement. But before we get into all the charts and everything and all the fun stuff, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you're going to be able to register for our email newsletter list to be notified of any big upcoming things. Along with that, in the newsletter, we talk about a bunch of stuff that we just don't have time to talk about in the live stream, and that's going to be everything from stocks, crypto, options. If it's moving, it'll be in that newsletter at some point, so make sure to sign up for that if you haven't done so already. Along with that, click on the live trade room subscription and trial info. From there, you can register for a free 3-day trial in the room. You can hang out with us for a couple days, ask some questions, and just kind of generally have some fun. See how we approach the market, see how we trade. It's just a good way to get your feet a little bit wet in, in the world of Slingshot futures. So make sure to sign up for that so you don't miss out on a cool opportunity to see what we do. Now, jumping into the news for today, obviously the news for today we just talked about. We have President Trump on the microphone, 1400 Eastern. Going into tomorrow's news, we have 8:30 PPI, and the PPI is giving us a forecast of 0.2%, and it's really the only big U.S. news that we have going on for tomorrow. Now, obviously, we do have crude oil inventories, but that's not going to impact anything other than crude. So the only big number that'll have an impact on the markets is going to be the PPI at 8:30, and then, of course, at 10:30, we have the crude oil inventories are forecasted this time around at negative 1.167 million. Generally speaking, the API gives us a bigger clue in terms of what to expect. Let's see, the API comes out every Tuesday, so a little bit later today at 4:35, so 16:30 is when you'll see that news announcement coming out. And again, for the most part, the inventories and the API is usually a lot more accurate, so I like to wait for the API in the afternoon so we can kind of expect, or at least get an idea of what to expect for tomorrow's inventories session. Jumping into the charts, man, oh man, we have some movement, that is for sure. The euro continuing to drive lower, breaking through support at 19.030. We're just not getting any correction up. We've been talking about how the gas pedal has been down for so long that we need to start easing off a little bit. We don't want to be too aggressive anymore because, well, it's been aggressive since the middle of April. So that being the case, we're in a situation now where we have to wait for larger corrections to sell into. But the problem is the market's not giving them. Every time it tries to get a correction up, it gets slapped right back down again. Now, I'm not going to break rules or anything like that and jump in too aggressively. I'm still waiting for a correction. There's a reason we make these trade plans, and that is, well, not to get in trouble, basically. So really the idea here on the euro is to wait for the corrective phase to begin. Right now, it looks like they're trying to put in a 3-push wedge bottom. You have 1, 2, and 3, and an exhaustive blow-off. This is now creating a situation where if we do get a little bit of a pop back, there is an opportunity to sell again back to the lows, but when we start hitting those lows, Now we're getting into a situation where we're probably finding close to a near-term bottom. Now, I'm not saying this is the bottom and it's going to go up 200% from here, but what that does mean is that we're probably going to go slightly more range-bound in the next coming days to weeks if we can get a little bounce and see something like this back at the lows. For buyers who are looking to fade that kind of move, first of all, you're better at juggling knives than I am, but you're looking for probably an offset on the lows, right? We know that we're overextended to the downside. We're getting even more so down here. I wouldn't want to buy a smack on the lows, right? That wouldn't make any sense because this is still heavily bearish. So what that tells us to do instead is to utilize past movement to give us an idea of where to look for potential reversal areas. If you're short, this is still valuable information because these can be profit-taking zones as well. So we had a breakdown of about that distance from low to low. We then followed it up with a breakdown distance of that. But now we've gone really, really aggressive, and if we measure this up, you'll notice something very interesting begins to happen. We have a situation where we can take this low, add those two breakouts together, and we run into a scenario where that is pretty much right at the bottom. So that gives us a clue, right? We know that the last time around they broke out and it was about half the distance of the previous breakout. This time around they went exhausted and broke out equidistant to both of them stacked together. So now we can take this and say, okay, well, if that's the case, we now have a situation where we can kind of measure this up about halfway and look at that as a reversal area down at the lows. So that gives us a situation of support right down here, and let me see, let me turn off my my snapping here. There we go. Get that down on the lows, and that gives us a level of support at 18,480. So that will be the really interesting area that I'm going to be paying attention to on a downswing. Now, if you didn't catch how we caught that, I'll go over it really quickly again because that is a little bit odd, and I know a lot of people don't measure breakouts like that. But you measure the breakout from A to B, we measure the next one, and look at the difference between the two. This breakdown is about half the distance of this, but when we broke down further from this low to this low, it was the distance around equal to both of them combined. Well, if we know that these breakouts are going full half, double, probably going to go half. So this measurement down here is nothing more than half of that combined breakout move. So just to kind of clarify where that's coming from, that's where that level of support at 18,480 is. Now, we do also have a couple other levels of support, 18,555 and 18,365, that can definitely also add a little bit to the catalyst of a bounce. But for the most part, still looking for selling. I want to sell a better price, but if it does start pushing down to the lows, that could be a very interesting area of support below the market to find a little bit of a bounce back. Jumping over on gold, gold is breaking down through that rising support. This is what we wanted to see. Either one of two scenarios was really how we were looking at it yesterday. Either we get a continuation up to find some selling volume up here to push down, or we break out of this rising support, and we had a breakout here, and it continued on for the next 4 hours before seeing a bounce back. Doesn't look like it's necessarily done yet either. If we look at the time down here, we still have 49 minutes left, and this candle coincidentally closes right when Trump jumps on the microphone. But that said, this weakness up here, we're still not closing back above this rising level of support. And not only that, but we have major support and resistance coming right across there at 13.6. So these are all areas of interest, because if we close a candle that looks like this, we now have a situation where we have a rising level of support. Price broke out of that support, came back, retesting it as resistance now, looking for it to coil back over again. And that's kind of the scenario that we're looking at here, where we have a breakout of rising support. We've come back, and we're now testing it. If they close weakly and can't close above that, we could then potentially see this coil back over and start gunning for those levels of support underneath us. I don't think the sellers are necessarily done here, but they do have a lot of work cut out for them. I wouldn't give the sellers much more than a 55% chance right now, just because of the fact that when Trump hits the microphone, anything can happen, right? It's gloves off and whatever happens, happens. But that said, I am still looking for a potential coil over on gold to roll back over towards 4.7 and potentially even a little bit further to a new low to 2.3. And really, what I'd love to see is a test of 1300. We've been talking about that for a while, still haven't had it yet. Now, the level of resistance at 15.1 has been tested, and that has been respected so far. So we'll change that to a dash dot level so that we know it has been tested and it has been proven. Aside from that, not really much else to add to the gold chart. Looking at crude, I hope your ears are ringing. You're probably with me saying I told you so. We have a beautiful break up above, and this was the breakout move that we were talking about. We had another level of resistance a little bit higher up here. They missed it. They missed it. They kept pulling back, finding failure, 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 and we're probably going to get a breakout move to 70. This one actually ran all the way up to almost 71 before turning back down, but this whole zone is a huge sell area. And it is, well, that's exactly what happened. The market pushed all the way back down, tested major support 68.37, and just a gorgeous turn off of the highs. Now, a lot of this happened over the past hour or two. A lot of volatility really started kicking off at 11 o'clock, 11:30, and started going crazy with all of the talks with, you know, the Iran deal, this and blah, blah, blah. Crude just went bonkers. So, I mean, I can't give myself too much credit. This was a catalyst on news, but I certainly am not going to back off of the fact that we've been talking about this high being a monstrous level of selling resistance, and sure enough, here we come coiling back over again. I am looking for the bear side to continue, to the downside looking for 67.23 next to see if we can kind of coil back down towards those levels of support. And then again, if we can start breaking through some of this garbage down here, then we have a shot at getting down to 66.23. So there is a lot of open potential here for the crude oil market to fall. It's just a matter of, you know, do they want to do it now on the backs of some of this news stuff? Or are they going to wait for tomorrow on inventories? Or maybe they wait for next month when something else happens. But right now, this sell zone at the highs held beautifully. We are now looking for the downside move to continue for at least a one-to-one move down, if not a little bit more. Try to push down through 67.23 would be the next big hurdle. Looking beautiful off the highs. No new levels of support or resistance to really add. We have that resistance at the high now at 70.73, and that's really about it. So we'll leave that alone. And the S&P. The S&P, man, they look like they were going to really get a ramp to the upside. Beautiful bullish momentum, trying to break out of the highs of this falling resistance. And, well, given the way that it looks now, not looking so great. Now, again, a lot of this is coming off the backs of a lot of fundamental stuff. News coming out with Trump talking to Macron and then other people saying, no, he didn't. Again, the news is all a mess. But it's a pretty big failure off the highs. Price tried breaking out of the top of the wedge, completely failed, rolled back over again, and now we are resting on top of major support once again at 57.75. This area is a large area of interest and definitely something I want to pay attention to. If we zoom in a little bit closer, we can see that we finally do have a physical test, and it held beautifully. If you were watching that this morning, or well, I guess this afternoon is really when all that happened. And now it's just a matter of, do they want to continue supporting this level at 57.75, or is it going to break down on the next attempt? A breakdown on the next attempt would create that as a new level of resistance on a retest for continuation down. And again, I'm going to say the same thing that I've been saying since back here and up here and over here, and I don't think the sellers are done yet. The sellers have had beautiful drives to the downside with really bad follow-through. I think in order for the sellers to really lose hope that it's going to break down, we're going to need to see somewhat of a big failure, a lot of traps, something that gets one side suckered in heavily compared to the other, and then see a rocket ship the other way to really kind of push them off of the sell side, because every time we have a rally up, it gets pushed right back down again. It's just the way that it's working right now on the S&P, and although I would love to see below 2,500, it's, well, that's the area that we're stuck in right now. I shorted at 70. You talking the S&P or are you talking on crude oil? Shorted at 70, that Red River surprised me. Yeah, it's, I mean, either way, it's a beautiful short irregardless of what market you chose, but, oh man, beautiful trade. Awesome work. So, you know, right now the line in the sand for the S&P is going to be at 57.75. If they can break through that, then we have a good shot at continuing lower to 26.5. That's kind of what we're waiting for right now. Nothing else really new to add. I suppose we could add, man, a minor level of resistance off the highs here at 70.5. Oil, of course. Okay, cool. That's kind of what I was hoping, but you know, I mean, it could have been 26.70 on the S&P, so you know. But either way, great work. Now it's just a matter of seeing how far the S&P break down. New minor level of resistance. I'm not going to give it much more than minor at 70.5. So, that's going to do it for the index, at least. Over on the bonds are finally breaking down on some of this back and forth movement. All of this news finally getting out of its system a little bit and breaking lower. So beautiful hold off the highs. You definitely had to have your patience in check, that's for sure, because that took the better part of a week before it finally broke down. But we are getting that breakdown continuation and looking for more. Breaking through support at 143.09375. Next level of support is at 142.78, 125 after that. Overall, not too bad. We'll just have to wait and see if they can keep it going. Oops. Goes back up to the top there. There we go. All right, and then we take a look at the stocks. Now, of course, while we're going through here, feel free to type in any markets you want me to take a look at for you. A couple of them that jump out today. We've got a lot of movement across the board, but a few that are really kind of standing out. Of course, we'll look at our common ones first. Twitter. Twitter is seeing a little more continuation to the upside. But again, it's in the back of my head, oh, okay, well, we have a bull bar and it's pushing higher. How long until this craps out? You know, I'm not really that convinced on the upside, if you couldn't tell by Twitter or by my remarks there. I still like Twitter for the longs, but I think Twitter needs to pull back to buy cheap. Every time it pushes a new high, it fails, and that's kind of what we're seeing right now. We already have, looking on the 1 minute chart, a double top, and it's fading all the way back down again. So it's just not looking that great on Twitter. We're getting that breakout move, but I still want to see a little bit of a pullback. Big area of interest that honestly stands out pretty nicely would be these lows down here, right? This kind of little middle area at 29.90s. We have a little trap low. Went bull engulfing. If the market comes back to that area, that could be a pretty heavily defended zone of interest, not to mention the previous exhausted blow-off area here and the gap fill underneath that. Lots of levels of support there. 29.90 is going to be the area that I would become interested for right now. If you're already long, I'm just kind of waiting and kind of seeing what happens. I mean, it's been awesome, but, you know, it's kind of blah right now. We'll wait and see. Boeing, kind of an interesting play on Boeing. With all of the crude oil volatility, one would kind of step back and say, well, wait a minute. Boeing has a pretty big hand in oil because, well, they need it. And it creates a situation where now we're looking at oil, seeing it go all over the place, and Boeing actually did follow along quite a bit of that. Mostly bearish day today, but when that news announcement came out on oil, Boeing definitely caught a nice little pop there. So we might be seeing a little bit of correlation peeking through the cracks a little bit here with Boeing and oil. See, man, that's a hard one to say, Boeing and oil. Trying to see a little bit of a support bounce. Still looking at the support level off of the lows around 320s for a potential bounce off of it. That's where we were talking about it in the first place anyway. But seeing some pretty good continuation here. Pulling back just a little bit off of that resistance area at around 340s. We'll have to wait and see if they can break above that. Could you take a look at GE later on? Definitely. GE is actually one of them that was kind of on my list already because of its just beautiful rise higher today, intraday. It has since pulled off the highs a little bit, but I mean, just look at the daily chart. You know, I want to be so bullish on GE. You know, it's such a, you know, obviously they've had some issues, right? A lot of this was sparked with some pretty negative things. When did that whole thing kind of blow up? Was that last year? Towards the end of the year, maybe early this year? I don't remember anymore. I have a hard time remembering what I ate for breakfast. But GE it's in a bear trend, and I can't ignore the bear trend overall. I like this as a kind of market that I would consider, you know, building into long term. Something you would kind of drip into, right? So let's say as an example, you know, you had a really good trading week and you've got an extra couple $100 laying around that you don't really need for anything. Maybe throw it in GE. You know, those are the kinds of things that I'm really looking at GE with, is more of a drip investment kind of thing, slowly building in, but not going too heavy on any one thing because it is still a very heavy downtrend. I think that's the safest way to play it right now with money that you really just don't care about. That way, when it does, you know, as you amass a larger position on the way down, if it does end up catching a nice rally up and goes flying up to 70, you have a beautiful position that you built in the whole way down with money that you didn't care about anyway. You know, just don't buy a couple of cups of coffee and you'll be fine. You know, that's the mentality that I'm approaching GE with right now. It had a really good day today, but don't let that fool you into losing sight of the overall stronger bear trend, because that's definitely in play right now. Obviously, they had a little bit of a triple bottom down there, a lot of support coming in around 1280s. I don't think that's enough. I think sellers will be looking for any excuse to sell more, so I'm just looking at it to kind of build in slow, I think is the best way to do it. DCA is what we call it in the room. It's dollar cost averaging, just basically taking little bits and pieces, money that, I mean, it's only a $14 stock right now. You know, don't get 2 cups of coffee, 3 cups of coffee, well, 1 cup of coffee if it's from Starbucks. And, you know, just buy a share of GE or, you know, on Robinhood so you don't have to pay commissions. And just slowly build into it, I think, is the safest approach. July corn and wheat, CN18, WN, gotcha, perfect. So corn and wheat on the longer time frames. Let me get this out of the way really quick here. I love me some ags. I think the agricultural markets were kind of shaken a little bit in just the sense that, you know, everything was moving really, really well in the ags because nothing else was, right? Everything else was just completely dead. And then everything else started picking up, and the ags are like, well, I guess I don't have to do anything anymore. It just kind of crapped out. The agricultural markets have been very slow. But we'll take a look at some of them. Actually, let me just load a new chart. We don't have to break that one. Now, just to clarify, on July corn and wheat, are you looking at longer time frames, like a daily chart, a 4-hour chart? Just kind of getting a feel for what your preference is. I'm going to load it up on a probably a daily, and we'll go from there. So ZC, I'll load this up on a daily chart there. We'll load up our anchor template. Come here, there we go. So this is the daily of corn, and really corn has caught a really nice reversal off of the lows. Now, coincidentally, we had someone else asking about corn, I don't know, maybe a couple weeks ago now. I was talking about it back here and how I really liked it for a bullish breakout. And then we had a bunch of crap news come out and it gapped down all the way back down to where it started. So they had this huge bull day and then had to do it again because it was taken all back. So this created a situation where we're probably going to fade back a little bit, and we have now found a bottom, and it is rallying higher. And this is the rally that I wanted to see back here. It's just so happened that it gapped all the way down and basically erased an entire day of movement. So we are getting some really nice continuation through the highs, but the one thing that I just can't really shake is the fact that we had such a really strong leg up, a weak second leg, we know why that was weak, and then a good follow-through move, but when it broke above the highs, everyone just disappeared. Nobody really hung around for that breakout move to the upside, and now we're fighting as resistance. So this is creating a situation now where we have a little bit of trouble. We've got a level of resistance up at 404. Ironically enough, for any of you techies out there, you'll get that joke. 404 error. It's causing issues. And if corn can't get back above 404, that's going to be a problem. Not a lot of traders are going to want to see it falling back below 404, at least the buyers, with the breakout move. So, you know, with the breakout move not being so solid, it makes me not so pumped about the whole move. Monthly? Okay. Sorry, there's if you couldn't tell, there's a little bit of a delay from when I read your message, when you actually type it in, from when you see my response. There's like, I don't know, like a 30-second delay. So we'll look at the daily and the monthly. How's that? So the daily push to the upside, I'm a little bit concerned around that 404 area. I'm not a huge fan of that. On a monthly chart, it's a little bit of a different scenario. Now, I'll wait for this to load because it's got to load up a lot of data here. At some point. Monthly chart? Maybe? Maybe not. There we go. Okay. So for the monthly chart, we're dealing with a situation right now where it is very overextended to the downside. And this is a really good overextension because we have a situation where we had a huge rally up, a big push towards 900, and then just absolutely died all the way down. That, you know, that drive lower came really aggressively, another really aggressive follow-up, and now it's starting to get choppy. And this is starting to look like a spike into a channel, right? Spike, well, kind of more of a wedge, I guess, but either way, a spike into a channel wedge-ish kind of formation. But the big thing that really stands out to me is not so much that this is obviously overextended to the downside, it's also the fact that we are pushing down into major lows. This low way back here from 2010, that's no joke, right? That is a big level of support, and I'll give you an exact level here. That level is at 391. Now, 391, first of all, a break below that is huge. Not only are you going to have a lot of buyers who are looking at this on faster time frames around that area for potential scalps and all that, but we also have a situation where this is a monthly chart. We're talking about industry traders, right? JP Morgan and Goldman Sachs coming in and looking at this kind of movement and saying, hey, this thing is really cheap right now. And this is going to be an area where you're going to begin seeing a lot of accumulation. New lows start getting faded. You can see that in the formation of the candles. Lots of wiki movement down here, and it gets really slow when it starts breaking underneath that. So now that we're in a situation of potentially cheap, this is the area where any new low on the monthly is going to get bought up very aggressively. But we also have the spike down into a spike and channel. And spike and channels love corrective phases back up towards where they started. At least started the channeling phase. So the fact that we have a spike and channel to the downside right here. A little bit of an overcorrection down here. That would tell me to look for a corrective phase up. And that would be up in towards the 520s to 550s in that area. There's a lot of upward potential here on corn. And I mean, granted, we're looking at a futures contract at the 718. Obviously, you'd have to go a little bit further out if you're trading a monthly, but you get the idea. I'm looking for a little more continuation to the upside in the big picture. On the daily chart, it's got some issues. You know, it definitely has some issues, but we'll wait and see. You know, if they can break back above 404, it's got a good shot at least making a secondary leg to the upside. If it fails that break above 404, we could be grinding back down to 391, maybe even a trap low at 378. So a lot is riding on these highs right now. We need to see them turn back up. On the monthly, though, and you've got another $150 of upside. And then over on wheat, we have ZW 0718. We'll just do a daily. That's fine to start out. Wheat is... This isn't what you want to see, right? On corn, we saw them at least breaking out of the highs. This is a complete failure. This is what we call a twin reversal. They broke above the highs on the one candle, and then on the very next candle, took it all back. That's a twin reversal. They're about equal size. One broke up, one broke down. They average out. If you were to add them together, would be basically a doji, right? Didn't do a whole lot. And that's a failed breakout. So the fact that we have a failed breakout above the highs, we can also line this up with a possible three-push wedge top, and that even fell short. That makes me a little bit worried. You know, the daily chart on wheat looks really weak. I don't like the way that this looks. It looks like a huge amount of failure on the highs. If it does pop back up to the top, I have to assume that there is nothing but a giant sell wall above there to prevent any real big movement above that. But that said, we are also creating a situation of higher low, higher low, higher low. They are obviously ramping up. And if it does start breaking down, which it looks like it might be doing right now with that failure on the highs, whenever I see a twin reversal like this, I want to see them come back and retest it. That's kind of the proof of the pudding, if you will, right? Okay, it held, so what? Show me it again, right? Come back and prove to me that the market wants to hold it. So I would be looking on the daily of a retest of that high, right? See them come back, retap that high at 533.5, see if they can hold it or not. If they break above it, something's wrong, for the shorts at least. If they break above it for the longs, that's a really good sign. That could show a long-term potential move that is in the making. On the daily, though, if they do push back up to 33.5 and fail, I might be thinking, okay, well, now we're probably going to dive down towards, well, 467.75. So it's got a lot of proof to do here on wheat on the daily. Now, on the monthly, again, we'll give this a second because it takes half a century to load for some reason. But, you know, on the monthly, it's a very similar situation to what we've seen on the agriculture markets as a whole. Not much has changed, but we'll take a look at it once it loads up. Get the caffeine going here. There we go. So, this is a situation where I look at it and think, oh, crap. You know, I mean, it's obviously monstrously bearish. And the daily is showing a really heavy failure. that doesn't really bode well for wheat. Not to mention, one thing that really does stand out here is the fact that we had a huge bear monthly candle back in 2017, about halfway through. That entry point is going to be one tick underneath it, right? Now, on a monthly chart, it might be a handful of ticks, but you get the idea. Break below the low of that candle for sellers to continue the move down. It worked. Now we've come back to that same point, and it's still being defended. That creates a situation now where this might just be a retest of the entry that they had back in 2017 to sell more to drive the market back down again. So I really just, everything is pointing down right now on wheat. The daily chart is beginning to fail. I need a little bit of extra proof on there. The monthly chart, we're retesting a huge entry area from back mid-2017. There's a lot of problems. There's definitely a lot of problems with the long side. So heavy on the short side for wheat. You might find some bouncing or maybe a little bit of stagnation. I mean, I think the best that the bulls could really hope for is a range, and that's about it. I don't think this looks anywhere even close to a reversal off the lows yet. I think it's mostly just bear, and we're seeing daily failure after a monthly pattern retest. I've got to imagine sellers are probably pretty heavy here on wheat. I mean, if it wasn't obvious enough. Now, one other thing to consider as well would be an offset of the highs, right? Measuring the overall highest point to that low that happened before that breakup, right? They've already blown through that area as well. You can see that acted as a nice level of support or resistance. So let's widen it out a little bit. Say, okay, well, if that didn't really do it, what about this, right? Well, now we have a move from high to low and a full deviation down that creates support at 429.75. So again, I think a lot of sellers are in the understanding that we're starting to get a little bit choppier. They're not going to be looking for huge breakouts anymore, but I would anticipate a move down to around 429.75 in the coming months for some potential support to bounce back and then maybe transition into a range from there. Not looking too good, though, on wheat. Not looking too good. Drop that out of the way. Man alive, these markets are just chopping all over the place. We do have President Trump on the microphone here in about 25 minutes or so. And I haven't seen any other markets come in. We already took a look at GE. We got corn and wheat on the monthly and the daily. Perfect. Wonderful. So that's going to do it for today. I got to jump out and take care of a couple things. I'm still doing a bunch of spring cleaning, which is always... it's an absolute blast. But aside from that, like always, you know, underneath the video here, click the little subscribe button, click the notification bell icon to the right of that so you're notified every time we go live. We go live Monday through Thursday at 1 p.m. Keep an eye on today, you know, at 2 p.m., just right around the corner with Trump on the mic. Things get shaken up pretty well. It might get a little bit crazy. So just be careful, like we always say. Trade the plan, well, first of all, make a plan, trade the plan, then follow the rules. You should be A-okay. Until next time, rest up, enjoy, have a great trading rest of your afternoon, have a great trading day tomorrow, and we will see you all back at 1 p.m. for tomorrow's analysis. See what Trump ends up doing to the markets. We'll have to wait and see. But aside from that, enjoy, rest up, and we will talk to you all later. Thanks.